Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Ekta Batra, and these are the top stories that we're tracking at 1:30 p.m. Midcaps fall harder than larger peers as stocks fail to hold on to gains earlier in the week. Benchmark indices are down 0.8%. The midcaps down 1%. Metals and realty lead the slide.
Strong December business boosts Angel One and an order win lifts Realtel.
Radiant Cash powers up after a strong listing as the management tells CNBC-TV18 the company is eyeing a revenue growth of 22 to 24% every year and a dividend payout of 30 to 40%. The stock gains 18% intraday.
Vedanta slides as its latest production update fails to impress investors. Aluminium production drops 2%, while mined metal output rises marginally.
LTI Mindtree slides after its whole-time director and President Markets Venugopal Lambu steps down. This is the first high-profile exit from the company post the merger.
Hello and welcome to Midcap Radar on CNBC-TV18. I'm Ekta Batra. With me is Reema Tendulkar, and it's turning out to be a session which is weak at this point in time. We have barely seen any kind of recovery from lows. 18,074 currently for the Nifty. We have the Bank Nifty, which has been underperforming, down around 1% odd. So it is across the board in terms of declines that we've seen. Maybe a couple of stocks which are managing to hold their head above the water include something like a Divi's Labs, which is up around 1.3%. A couple of the auto stocks, such as Maruti, which is not doing too badly, up around 0.8%. But it is largely, you'd have to say, a lot of the defensives which are managing to hold their head above the water more than the other stocks this afternoon. But we have a lot of ground to cover in terms of what we should be doing with technicals and a lot of stocks in focus. So let's welcome our first guest on the show. Sudeep Shah joins in from SBI Securities for a technical check on the market. Sudeep, hi, welcome to the show. Well, how would you approach the weakness that we're seeing in the markets this afternoon?
Good afternoon, Ekta. See, what's happening is that despite the markets, they were trading in a tight range in the last 4 sessions and they're not able to cross 18,250 to 70. And that is the reason we have seen re-emergence of the selling pressure that we had seen 7-8 days back. So, and one more thing, what has happened is that with today's fall, markets have breached the last 3 sessions lows. So that is kind of indicating that the trend is weakening, and markets now Nifty could trade in a 17,900, 950 kind of range on the downside and 18,250 levels on the upside. So this could be a broad trading range. And what we're witnessing as per the derivatives data is also that a lot of significant put writing is happening in 18,000 strikes, which indicates that this zone of 17,930, 950 could be held as a support. And on the upside, with today's fall, 18,100, 18,200 calls are also witnessing severe additions. So that is giving us some kind of range bound with a negative bias kind of a view on the market, with 17,900 and 18,250 as the range.
But at the current juncture, is there a trade, or would you wait for this range to break on either side?
If we have a trade on a couple of mid caps now. Despite the mid-cap index not performing as what we had expected, now a lot of weakness is also witnessed in the mid-cap index also, along with Nifty and Bank Nifty. But there are a couple of stocks that are standing out. Now, a couple of them are the first one is Carborundum Universal. Now, that is a refractory stock. Now, what we're seeing is that this stock has given a fresh symmetrical triangle breakout, and it has been supported by rising volumes in such a market, which is adding strength to this breakout. So this and also the stock is trading at a 4-month high. It's trading above all its moving averages on the daily as well as weekly charts, which is indicating a better relative strength. So what we feel is that this stock can be bought with a 895 stop loss and a 1,000 target on the upside. The second name is RCF. Now, of late, we have seen a lot of buzz the fertilizer names, and RCF is a top pick amongst that. So stock, if we see technically, that has witnessed a bigger rally from 110 to 140 in the previous week, and it was consolidating in a 3-4% kind of a range within the last 3 trading sessions. But today it has broken above that range, and it's sustaining above its 20-day exponential moving average also. So we feel that there could be a continuation move on the upside in this stock, and this can be bought with a stop loss of 130 and a target of 150 on the upside.
Okay, all right, Sudeep, we're going to leave it on that note. Thanks very much for joining in and speaking to us. Well, yes, a lot of these broader market stocks have been buzzing. Like Sudeep pointed out, a couple of these fertilizer counters. We have JBM Auto, which is in focus. In fact, good time then to get Vivek Iyer in. He's going to tell us all the mid-caps which are moving this afternoon in our mid-cap movers segment. Vivek.
Well, thanks, Ekta. Quite a few of the stocks have actually cooled off from the morning highs, but despite that, we managed to highlight a few stocks. First on our list is both the Equitas twins, so Equitas Holding as well as the Small Finance Bank. Both of these stocks are up between 16 to 17% in the last 7 to 8 trading sessions, and today at a fresh 52-week high as well. TD Power 2 continues its upsurge today, hitting a fresh 52-week high. Moving on, some of the stocks where volumes today are very high. RCF, bouncing back very sharply. Music Broadcast as well today after a while is seeing buzzing in the session. Orient Cement, after the clarification that the company has given, despite the clarification saying that at this point of time they're not privy to any knowledge regarding a promoter stake sale, the stock continues to stay higher. APL, Apollo Tubes and Pocono today moving up on very strong volumes. On the other hand, it's in the broader end of the market, you're seeing the metal mining pack, quite a few stocks seeing a bit of profit booking. Usha Martin, Sunflag Iron and Sham Metallics, all three of them losing in the session. J. Kumar Infra today losing surprisingly on very large volumes as well.
Thank you very much for that. Get into a break. Up next, we'll be connecting with Sanjay Baveja, the MD and Global CEO at On Mobile Global, to discuss the 2023 outlook.
Welcome back. Well, as promised, we have the management of On Mobile Global with us today. The Bangalore headquartered company is a mobile value-added services provider. Sanjay Baveja, who is the managing director and the global CEO at On Mobile Global, joins in to discuss the outlook for the company and the gaming opportunity revenue drivers in the new year. Mr. Baveja, hi, welcome to the show. Thank you very much for joining in. Well, just wanted to start by asking you about what your 2023 outlook would be, say when it comes to revenue growth. There have been a couple of changes which have taken place. For example, mobile gaming obviously saw a huge spurt during COVID, and that has sort of tapered out now. And overall, the revenue growth for the company itself has been quite lackluster. Can you just provide us a couple of revenue drivers and your outlook going into the next year?
Yeah, good afternoon, and thank you for having me on your show. Yes, mobile gaming has been the driver for us. While if you were to look at our revenue, we could segregate that into the legacy products, and then we have the two new products that we've launched. One is Challengers Arena that we launched about 18 months ago, and then this year we launched Onmo. And both these are in different spectrum, but very clearly gaming products. For Challengers Arena, which we launched last year, it's been a stupendous growth that we've seen. We've seen about 20 to 30% growth quarter on quarter as it has come along in the last few quarters. We believe that will continue. So we expect, from a year perspective, we expect a 100% growth for this product, a triple-digit growth for this product as we go along. And similarly for Onmo, which is another product that we've just into a beta, we started the revenues started to come in. There again, a triple-digit growth will happen, and it will be a much bigger triple-digit in that sense. And while I can't give specific numbers, but clearly both these gaming products for us, one which is more focused from a 4G perspective with the operators, and the other which is a little more 5G focused gaming product, which is Onmo, will clearly show us a triple-digit growth for us. And these are new products. For example, Challengers Arena is till last quarter was about 8% of our overall revenue. We expect by this year end itself, it will be about 15%. And then the growth continues as we go along into the new financial year. Our legacy products, which have not been doing too well over the last few years, we expect even that, because we've got a few new customers who've come in, and we've got some confirmations also coming in. So over the next year, we even expect that to show some amount of growth, and because that's something that we've been struggling, if I may use the word, over the last few years, but now with new products. And that's thanks basically to Challenges Arena, where we've got 60 customer confirmations. We are live with 35 as we speak. And clearly that's what, as they go live over the next 2 quarters, we will see huge revenue growth happening quarter after quarter. And like I said, yearly. And because a lot of these customers are new customers for us, this is enabling us to have a cross-selling. And that's why, even our legacy products, we've been able to cross-sell to some of our new customers. And that's clearly giving us a leg up from a revenue perspective. While the overall numbers, I'd not like to go into detail of that, how much of that growth will it come to next year. But clearly, both these new products will show us a triple-digit growth for sure.
You said Challenges Arena will contribute 15% to your revenues by the end of this year. What about Onmo?
Which is March. March is still, Onmo is still small. It's about 1 or 2%, but that also, again, it'll be a much bigger triple-digit growth in the next year. Because that's where we've just started to launch. We just launched in this last 2 quarters.
So for FY23, will we see growth, Sanjay? Because for the last many years, your revenues have been declining on a consolidated basis, annual consolidated basis. FY23, should we see growth?
So FY23, we should see growth. And more than that, the 23-24, that's the big growth year for us. Till now, even in FY23, the H1, we've been stable, if I may say. We've not really grown, but the new 2 products will give us some growth. But the big growth is slated for 23-24, which is starting 1st of April. And we will see real serious growth because the legacy products will remain at the same level, while the new products will really grow pretty rapidly. So the expectation for 23-24 is very big as far as the revenue growth is concerned.
Okay. Well, just to extend that point a little more, you might see growth in FY23, FY24. That's what you're guiding for at this point, Mr. Baweja. But when do you get back to those levels of revenue which we probably saw pre-pandemic? FY18, your revenue was around 630 odd crores. FY19, 594 odd crores. Yes, there was a decline, but you've come down to around 520 crores in FY22. So when do you get back to that base?
I think fairly quickly. I would not give specific numbers, but next year itself will be, we might be there, we might be beyond that. So I don't want to give specific numbers, but clearly we will see serious growth happening next year itself in a big way, and we should top the numbers that you mentioned. Those are not very far away from where we are today, but yeah, we should top those numbers as we go along the next year, by the next year end.
Okay, and similar question with regards to your margins. You've done double-digit margins in 2 out of 5 years. You had around 9% for FY22. Again, when do you get back to those levels of, say, 10 to 12% on a sustainable basis?
Yeah. So you're right. We had a good 10 to 12% margin. And then when we launched Challenges Arena, and you'll notice that there's been a substantial increase in the marketing cost and that's because when you launch a new product, we've had a serious marketing spend that we've continued to do, and we will continue to do now. But having said that, the revenue is now growing at a much faster pace than the marketing expense. On a steady state basis, Challenges Arena should give us between 25 to 35% margin. Onmo, again, between 20 to 30% margin on a steady state. So the Challenges Arena steady state will happen in the next year for sure. And it takes, and our profitability goes from operator to operator. So it takes us 2 to 3 quarters as far as Challenges Arena is concerned to get into the steady state for any new operator. And then going on similarly for Onmo, which takes slightly longer. So we expect significant jump in our profitability as we go along. Our gross margin, you might have noticed, has already gone up by 4 or 5%. We expect that gross margin to continue to go up rapidly. Yes, the marketing expense is higher, but that will also grow, but at a much slower pace than what our revenues will grow. So clearly, we will see a rapid increase in profitability as we go along. While Onmo, because it's going to be new in the next year also, it may have some lesser profitability, but challenge arena will it get into a mature state and we'll see a significantly better profitability. So from the current products, which give us about 12%, the new products are going to give us around 25-30%. So over the next 2 years, we should see rapid improvement in profitability as we go along.
Thank you very much, Sanjay, for joining in. More questions, but we'll leave it for another time. Get into a break on that note. We'll come back with more of our individual stock. So stay tuned. Welcome back. In our segment, Midcap Spotlight, Sonia is joining in, and she's going to be focusing on Everready. Sonia, there is an ambit note. What is it that they're saying?
So, you know, Everready, ever since the Berman family took over, the stock has been doing very well, and there are a lot of positive developments within the company itself. So, Ambit wrote a very interesting report where they say that the Berman family takeover has resulted in a lot of positive changes for Everready. Now, the new promoters have put in a fresh team of professionals to run the company, and they are making a lot of changes, whether it is on the growth side, whether it's on the cost efficiency side, and that is resulting in a positive performance for the company. In fact, in the first half of the fiscal FY23, the revenues for Everready went up about 15%, and the new management has an aspiration to double the revenues over FY22 to 26. They are looking at improving the product mix across segments and not only focusing on the core business, but they are looking to enter a new category using strong distribution and their electrical legacy. The company currently has 4 million touch points and will be using this in order to further their business in terms of diversification into new products. Now, the strength of the stock is quite visible. If you look at it, the stock has gone up 22% from the November lows of 293 rupees, and it is just 10% away from its 52-week high, so very close to its 52-week high. Ambit says that assuming mid-teens earnings growth, Everready is trading at 27 to 30 times FY24 EPS, and as the execution track record builds up, the valuation upside will also, widen for Everready. Now, the Berman family, as per the latest shareholding, owns a little over 38% in Everready. Back to you.
Okay, all right, Sonia. Thanks very much for that. So a buzzing stock there, Everready. But let's move on to another buzzing stock. CESL has concluded the tender of over 6,400 electric buses for 6 states, and sources say that JBM Auto is likely to emerge as a big winner. Vivek Iyer is here with the details.
Well, that's right. So CESL, which is actually the Convergence Energy Services Limited, a wholly owned subsidiary of EESL, which is the Energy Efficiency Services Limited. One of the main mandates that they have is the introduction and ramping up of electric buses as far as India is concerned. So what they did is they have concluded the tender, and this particular tender was for 6,465 electric buses, and this was spread across 6 Indian states. This was the first tender under the National Electric Bus Program, a new program that has been launched. The total value of this particular tender is well over 30,000 crore rupees, and what we understand from our sources that one of the big winners here is JBM Auto. We understand that JBM Auto is likely the lowest bidder for almost 2,500 buses, and which would make it the biggest bidder in terms of the number of buses. So this particular bid is spread across Haryana, Gujarat, Telangana, Kerala and Arunachal Pradesh, and we understand that the estimated value of the contract would be over 10,000 crore rupees. It's important to note that this particular order involves, number one, supplying the buses, operating the buses, and also maintenance, and it would be for a period of almost 12 years. So it's an important development as far as JBM Auto is concerned. We reached out to the management of JBM Auto. They're there to respond to our queries.
Okay, thank you very much for that. That's the latest that we're picking up on JBM Auto. By the way, for the markets, we've managed to recover a tad bit. The Nifty was trading below 18,100. Now we've managed to climb up above that level, but still down close to about 0.6% or 111 points lost on the Nifty. Out of time on Midcap Radar, your stocks when we return.